Yo, 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 yo! Gorilla Gang! What's poppin'? This is the new abode, baby. This is the new Airbnb that I'll be staying at until I get into my apartment, hopefully by the end of July here, but much nicer place than the crack shack that I was staying at before. Holy Toledo. Titan's outside. He's chilling in the tree trying to freaking hunt a bird or something. I don't know what he's what he's up to, but maybe he'll hop back in here by the end of the video. Anywho, what is up, everybody? Welcome to Trey's Trades, where we freaking talk fast and don't skip class. I like to preface by saying that I'm not a financial advisor or expert, so take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're going to give you an update here on ticker symbol AMC. I'm sorry that yesterday I didn't put out a video. I went to the ophthalmologist, and I can only see on my right eye to begin with. My left one's pretty jacked up, can't see much, and they dilated both my eyes, so I couldn't see anything. I was pretty useless in the world. I couldn't give you much of an update even if I tried to, but nonetheless, let's just talk about what's going on here. So I want to give you a little bit of an update on the technical analysis here, but mostly I want to focus on short interest in puts and how this whole sort of equation can work, because I think this is something that's not really considered in terms of, what can be considered short interest in any given stock. So I want to talk to you about how puts actually affect the market. So let's just talk here about how this would end up working. First off, short interest on AMC right now is about 14.36%, 73 million shares or so, has stayed about the same, floating back and forth between 14 and 15%. And we're going to have to wait until probably tomorrow to see any sort of return shares that could have come in the last 2 days, because you did see, a pretty decent push, not yesterday, but 2 days ago. So maybe that's actually today. But if there was any sort of shares that were returned on that push 2 days ago, they'll show up here today. So you'll be able to see that. Just check up on Ortex, you'll know the whole picture. But most importantly, that I want to talk about is this overall sort of put hedging that can take place. So gamma squeezing can take place on both ends of things, most typically on the call option side, because there's infinite upside for a stock. Puts, though, when you gamma squeeze puts, the only amount that you can make is if it drops down to zero. There's limited returns in terms of a put. So it's not typically something that you hear talked about, but this is something that happens. So calls. Let's just say, hypothetically speaking, that you were to buy a call at a $65 strike. You have the right, not the obligation, if that runs in the money, to buy, if you had one contract at $65, 100 shares at that $65 strike price by that expiration. This can be a good thing, because if a stock runs up beyond that $65 strike to $75, $80, $85, $90, you get to buy those 100 shares for cheaper and just give up the premium. Puts, on the other hand, if you have puts and you were to have this run in the money, let's say that you bought a $65 strike put and the price is trading at $70 and it drops down to $50. Well, what ends up happening? You have the right, not the obligation, to sell 100 shares at that $65 strike, instead of, if it's trading at $55, $50, $45, you'd have to sell it there. You get to make a little more money in terms of what the stock price ends up dropping down to in the grand scheme of things. Both of these options have to be hedged for. So why is this important, right? I want to keep this nice and simple for you. If you look at AMC, you have a huge amount of call option and put option activity. And I think the best way to illustrate this is if you look at Stonko Tracker, right? So let's look at Stonko Tracker and look at all the call options and all the put options that are in the money and out the money. So looking at the in the money, out the money calls and puts, you've got, in the money about 50,000, 278,000 out the money calls as it is right now. But on the flip side of things, you've got 30,000 puts that are in and 165,000 that are out the money. Now, why this is important is because gamma squeezing taking place on the downside with puts can definitely happen. So I've talked about this briefly in a different video, saying that I think it's going to be a pretty decently volatile week, and that's because there's so much liquidity and leveraging that's taking place in the derivatives market around options. Now, since there is only 14.56% short interest or so, based on 85% of the exchange reported data, another thing to look at is how many puts there are in the market, because if there's puts that are out the money that run in the money, it actually can push the stock price down. That can actually happen, right? So that's something that you need to pay attention to. So what are pivotal points in order to watch? Right, well, let's just look at the puts. You've got 7,000 open interest, about $40, 5, 7, 6, 7, 8, 7, 4, 5, 13, 23 at that $30 strike. So if this, the stock price is to drop down beneath those strike prices on the puts, on top of the fact that you can have essentially call options that run in the money back to out the money, and those end up getting unhedged for. The same thing happens on the downside with these sort of puts on the market. Now, how likely is this? I'm not, here to tell you that. I'm more bullish on the stock right now than I am a week ago, 2 weeks ago, just based on the overall price action where we're sitting on the chart in terms of technical analysis. But it's important because you can get an idea of how heavy shorts are trying to hit the stock on any given day. That's something to consider. You're not just burning shorts in hedge funds and all these big firms by smoking them on, the actual held short shares. You're also smoking them in terms of puts that expire worthless, out the money. Nothing ends up coming to fruition with those overall puts. That's an important piece of this that is not even talked about, right? So that's something to consider. But anytime that you're looking at short interest, and that's why when I look at every single given week, Stocko Tracker is actually a great tool because you can have an idea of how pivotal some weeks can be in terms of big moves on the stock and how volatile of a move you're going to have on any given week just based on the derivatives market. If you have a lot of calls, a lot of puts on any given week, you can expect the stock price to do more of this, more of the up and down, up and down, up and down, which makes sense when you look at the call option and put option market right now and you look at the overall stock price over the last 3 days or so, right? We had pretty volatile days. You look back on, this would have been Monday right here. Not a lot happened, but Tuesday, huge push to the upside. Had to be a little bit of call option hedging that ended up happening in the market. And then yesterday, you had a 5.36% downswing. And if you look at the options and put market, what ended up happening, right? Well, let's just look at this really quick. 40 to 45. 7,261.2 on the put side of things. On the call side of things, what do you have? 19,000 at 40, 5, 5, 5, 5, 10. There's a lot of call option and put option activity in every single one of these strike prices, which is why it's moving down, up and down, up and down, up and down. Yesterday in my Discord, I came out and I said, I think you're going to have a little bit of yo-yoing, a lot of the up and down sideways trading sort of price action, and you did get that yesterday, right? You had a lot of wicks on the tops, on the bottoms of every single one of those candles that pushed the price around in any sort of way. Now, why is this important is because it can help you make decisions in terms of when to buy stock if you want to do so, and if you want to play the call options market, that's the volatility that you want to see. So, on any given day, I think it's really important that you don't just look at the 85% exchange reported short interest, but also look at the derivatives market, because if those expire worthless, out the money, that's firepower that's just pissed away into the shallow realm by these big hedgies and the big firms that are betting against you, betting against the apes, betting against the stock, and betting against everybody, man. So just keep that in the back of your mind. Now, what am I expecting? What's the things to watch for in terms of AMC over today, tomorrow, the next following days? I've briefly mentioned this before, but it does come down to that same sort of stair-stepping effect that I've talked about briefly before. I think there's two big things that you want to watch for. You want to see a break over this descending level of resistance over this large time frame scale on the chart. And what you're looking for essentially is connecting dots. 1, 2, 3, 4, 5, 6, 7, 8, 9 different touch points right here. And a break over, if it was to happen today, for example, $51-ish, $50.60 or so, would bring you a pretty nice, big, hard push of a move on top of the fact that you have really heavy call option activity in the overall stock. You've got 10,000 open interest at that $45 strike, 15,000 at $50. So those are both going to bring you some pretty heavy, big moves on top of the fact that any sort of puts that are in these overall strike prices are going to end up getting unhedged for, which could push the stock price up more. So that's something to keep in the back of your mind when you're watching the overall stock market and the moves that this thing is making. So we're in a bullish move, man. I mean, this is pretty solid. We're stair-stepping very slowly, higher lows, higher lows, higher lows, higher lows. You just want to keep that overall momentum leading into this next bull cycle, and I do think that is going to end up happening. So don't be scared away by any sort of downswing on any one given day. We were up 20% 2 days ago, so to get back 5, I expected that. That's okay. It's a part of the journey. It's a part of the process. Keep level-headed, cool, calm, collected, as TMI would like to say. That's what I've got for this video. So before I wrap this thing up, I am just going to tell you guys that I am going to Miami this weekend. I'm going to watch the Rolling Loud Music Festival and just kind of let loose for a weekend. So I'll probably be on Twitter, at least to some extent, but I don't think I'll have any videos coming out Friday, Saturday, Sunday because I will not be here. I'll be in Florida. So if you're in the Florida area, and you're in that festival, you just want to hang out, I'll be there. If not, that's cool. I'll be back Sunday night, and I'll try and help you guys out any way I can. So blah, 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 drop a like, subscribe, everyone, my friends. Catch you on the next one. Light taps, baby. Light taps always. Much love and peace.